Well, the U.S. inflation numbers are out this morning, and they've now reached the lowest level in over 3 years. And this truly should be the final nail in the coffin if there's anybody out there who's still doubting that the Fed will cut their interest rates when they meet next month. The Labor Department's report says this morning that consumer prices rose by just 0.2% from June to July, a year-over-year increase now of 2.9%. That's the mildest increase since March of 2021. So when you take this easing of inflation here, you couple that with a decline in the cost of essentials like food and gas, that really should signal that the aggressive price hikes of the past few years may be pulling back, maybe subsiding a bit here. Obviously, a lot of Americans are still struggling. We got high food prices, far above pre-pandemic levels. They're never going back there. The key drivers of the recent inflation trends are including gas prices stabilizing. We're seeing a drop in the cost of used cars. You remember just a few years ago how expensive used cars were. They had surged during the pandemic. Well, that's now come back to normal. As for core inflation, always important, that excludes the volatile food and energy prices that increased by 0.2% from June to July. So this decline in core inflation, that's encouraging for a lot of economists. It suggests a broader easing of price pressures across the entire economy. The Federal Reserve, of course, as they always do, they're closely monitoring the job market as well. And this latest data indicate that there's a slowing in hiring and a slight increase in the unemployment rate to 4.3%. That has been driven primarily now by an increase in job seekers rather than by layoffs. So when we see the inflation easing, we see the unemployment numbers relatively stable here. A lot of economists now are widely expecting that the Fed will implement a series of rate cuts beginning with its September meeting. I wholeheartedly agree with that. In an absolutely huge move here in the packaged food industry, Mars has announced a $36 billion acquisition of Kellanova, which is the maker of Eggos, Pringles, Pop-Tarts, so many other of these healthy food staples that we like to feed our children. This deal is set to merge iconic brands. We're talking about M&Ms now, Snickers, Pringles, Pop-Tarts, all under one corporate umbrella. That will make it one of the largest transactions in the entire history of this sector. Now, in the deal, Mars will be paying $83.50 per share for Kellanova. That's a 33% premium over its recent price. The stock is trading up about 42% in the past couple of weeks. Now, the U.S. food industry in the space has been seeing a large surge in M&A activity lately. Companies are seeking to gain scale to cope with the shift we're seeing in consumers towards more affordable private label products. That's really been taking off with prices rising as much as they have. There are also concerns about the growing popularity of weight loss drugs. We think of Ozempic that might reduce consumer demand for snacks, and this has further incentivized companies to consolidate their portfolios, again, in order to stay as competitive as they possibly can. So with this acquisition now, Mars is going to be strengthening its snacking division. It plans to invest locally and offer healthier options. For those of you who haven't heard of Kellanova, this split from the parent company Kellogg's last October. It has a strong presence in the salty snacks market and sells cereal outside of North America as well. Now, the acquisition here, this will bolster Mars's position in the U.S. snacking market. Currently, it holds a 4.54% market share when you compare that with Kellanova's 3.9%. So there's a big boost there. Interestingly here, even though this is a massive deal in the space, legal experts are weighing in. They're saying it's unlikely, or likely rather, that the deal will face minimal antitrust scrutiny. That's because of the limited overlap in the company's product offerings here. The deal is expected to close in the first half of 2025. The U.S. manufacturing sector is booming once again, and this is largely in part thanks to some key legislation that was passed back in 2021 and 2022. And as a result of this, we have seen a pretty dramatic rise in manufacturing construction spending, and this has been driven by the Infrastructure Investment and Jobs Act, the Inflation Reduction Act, and the CHIPS Act. Under this, we've seen aerospace and defense spending. We're also seeing some major growth due to global geopolitical tensions, and this has been pushing defense spending now to record highs. I recommend that you have a look at the Harvest Industrial Leaders Income ETF, ticker HIND on the TSX. This fund's industrial portfolio includes leading companies in the aerospace and defense and the industrial machinery areas. HIND uses an active covered call strategy, so this gives investors higher monthly income. If you're looking to benefit from this resurgence in the U.S. manufacturing and the semiconductor boom, the strong aerospace and defense sector, HIND is your chance. You can learn more today by visiting harvestetfs.com. I will put a link in the description of this video. Now, I'm going to break all of the YouTube financial channel rules here. As you know, we don't give specific advice on our channel, but I'm going to give you an investment tip. Invest in your sleep with a Fawcett mattress. Made with sustainable materials, their mattresses offer exceptional support and are crafted on Vancouver Island. They're built to last and keep you comfortable night after night. And now you can personalize your mattress for your unique sleep needs. Use the code BEAVIS10 to get 10% off your entire order, plus enjoy free shipping Canada-wide. Fawcett mattresses, sleep better, live better. Please visit the link in the description of this video. Air Canada passengers, you should be prepared for a possible disruption next month as the airline's pilots are preparing for a potential strike. The pilots union, which has been in negotiations with the airline now for over a year, they report that they are still far apart on key issues, particularly compensation. So they say that after working with a private mediator earlier this year, the parties are now in conciliation, but tensions are reportedly still high as pilots are voting on whether to give their union a strike mandate. The earliest possible job action will be slated for September the 17th. Now, apparently frustration amongst the pilots is growing, and this has been fueled by a significant pay disparity between Air Canada pilots and their American counterparts. Charlene Hudy, she's the chair of the Master Elected Council representing the pilots, says that some American pilots can earn nearly double what Air Canada pilots do. And she says, we're striving for this world-class contract that Air Canada pilots do deserve. And she called the wage gap across the border unacceptable. There was a point in time back in 2013 when we were pretty comparable, almost even with our fellow counterparts at United. But starting next year, United airline pilots will be earning 92% more, according to Hudy. Now, the union represents over 5,500 pilots. It's distributed strike-ready lanyard stickers, pins to its members, and these are meant to send a signal for their preparedness for a possible walkout. Now, despite this looming threat of the strike, Air Canada is remaining optimistic about the future. A spokesman, Peter Fitzpatrick, he said in an email, the negotiations are a normal part of the bargaining process, and he says we are committed to reaching a fair negotiated settlement with our pilot group. The airline says it has made progress on several of the issues and are actively working towards resolving the remaining disputes. A spokesman for Air Canada did express confidence in reaching a final agreement within the next few weeks. They're aiming to avoid any major disruptions. Well, here's a story for you. The Canadian Broadcasting Corporation, CBC, they've come under fire after they revealed that they paid out $18.4 million in bonuses for the 2023-24 fiscal year. And this comes even though it eliminated hundreds of jobs. Documents show that 1,194 employees received bonuses, with 45 executives receiving over $3.3 million in total. Average there was more than $73,000 per executive. So this payout, it has sparked some pretty big outrage in some circles. Imagine this, particularly amongst the conservative politicians who have labeled the bonuses as insulting and sickening, especially given the current economic challenges that so many Canadians are facing. The bonuses come at a time when CBC laid off 141 employees, eliminated 205 vacant positions as part of its effort to balance its budget. The bonus represents an increase from the $14.9 million paid out in the previous fiscal year, which has also raised questions about the broadcaster's financial management and priorities. Now, the CBC has defended the payments as performance pay, a contractual obligation for non-union employees tied to the achievement of specific company goals. And this type of compensation, they say, is common in both government departments and in private companies. It is. But in this case, the optics here of awarding these bonuses during a period where the cuts that they've made have been so widely criticized, with MPs on the House Heritage Committee questioning the appropriateness of such payouts. Now, CBC President Catherine Tate, she has expressed frustration with the characterization of the payments as bonuses, but she does acknowledge that this negative perception has initiated a review of the broadcaster's compensation policies. Now, in January, she spoke before the Parliament House Heritage Committee. She said at the time, I certainly will consider all scenarios. However, we have a program in place. She was asked about whether she would consider structuring the bonus program differently, and she noted these are not frivolous awards given at Christmas time. This is performance pay. Now, to make matters even worse for the CBC, this controversy comes when we're seeing ongoing scrutiny of CBC's financial practices, as they, of course, rely on public funding. The broadcaster received an additional $42 million from the federal budget this year. That, along with the layoffs, operational cuts, it has helped reduce its projected budget shortfall for the 24-25 fiscal year from $125 million to $20 million. But even with that decrease in the deficit, the debate over these bonuses has fueled renewed calls from conservative MPs to defund the public broadcaster. Opposition critic Rachel Thomas condemned the CBC as not worth the cost, and she's actually proposing that they use its headquarters, repurpose it for housing. That is all for today. As always, thank you so much for watching. We'll see you in the next video.